Welcome to today's custom deep dive. Usually, when you think about London luxury real estate, you picture like sprawling mansions and glittering penthouses,
Oh,
right?
yeah, absolutely. Just pure glamour.
Right. But right now, for the global ultra wealthy, a London property isn't really about the view. It's functioning as a financial panic room.
Okay, let's unpack this. We are looking at a new property soup report today.
Yeah, and they're tracking data from the Benham and Reeves index.
Exactly. Detailing this sudden, honestly surprising rebound in London's luxury market. So, our mission for you today is to figure out why ultra-wealthy buyers are suddenly returning after what was a very noticeable slump.
It's a wild shift. The numbers reveal a massive tug of war happening right now. From the first to the second quarter of 2025, demand for homes in the 2 million to 10 million pound range rose 1.8%.
Which, I mean, on paper, that sounds microscopic.
It does, yeah. But in this specific tier, that actually represents a staggering influx of capital. And it's so counterintuitive when you look at the UK's recent domestic tax reforms. Just impartially reporting here, the UK recently introduced a 40% inheritance tax on global assets for non-DOMs.
Right, those are the wealthy expats who live in the UK but claim their permanent home is elsewhere for tax purposes.
Exactly. Combine that new tax with a stamp duty surcharge hike up to 5% on additional properties and, well, you'd expect a mass exodus.
You really would. But what's fascinating here is that global instability is entirely overriding those domestic tax anxieties.
Wait, really? The global stuff is outweighing a 40% tax hit.
Yeah, it is. The report points to escalating trade tensions in the US and, of course, continued unrest in the Middle East. When the globe feels unsteady, these ultra-high net worth individuals prioritize long-term capital preservation over short-term tax hits.
So even though they're taking a major hit on taxes, just parking cash in London brick and mortar acts as a hedge against political volatility or wealth seizure in their home countries.
Exactly. It's basically the price of admission for that capital protection.
A financial panic room, like I said.
Yeah.
But if I'm reading this data correctly, they aren't actually putting those panic rooms in Mayfair or Kensington anymore.
No, not at all. They're completely bypassing them. Traditional prime central London postcodes are actively shrinking. Demand in places like Holland Park fell 3.4%, and Pimlico dropped 3.1%.
Wow.
Yeah. Meanwhile, we are seeing demand in southwest London spots just boom! Chiswick is at the top of the index with a 39.3% spike. Putney is up 37.8%.
That's a huge swing.
It really is. Even Clapham surged to 36.9% and Wandsworth rose 5%.
I mean, a near 40% spike in Chiswick compared to an actual exodus from Holland Park. To me, that sounds like a massive value play. They want the safety of the London market, but they flat out refuse to pay the heavily saturated central London premium.
Mark von Grunter, the director of Benham and Reeves, theorizes just that. Investors see significantly better upside in the Southwest. And because that money is actively hunting for value, it creates this very tangible ripple effect.
Meaning it pushes out further into other boroughs.
Precisely. Wapping, over in East London, just saw an 18.5% year-on-year surge in demand. When the core gets too competitive, the capital immediately seeks adjacent value.
It's basically a gold rush for that middle luxury tier. Yet, looking at the absolute stratosphere of the market, I mean, the super prime properties over 10 million pounds, that momentum vanishes entirely.
Oh, it completely flatlines. The super prime segment is incredibly fragile right now.
I saw there were literally 0 recorded sales above 10 million in Wimbledon or Holland Park in the second quarter. So what does this all mean? Are the super prime buyers just playing a waiting game compared to the merely wealthy?
Yeah, that seems to be the case. Fitzrovia is leading that top tier with only 25% demand. The buyers in the 2 to 10 million pound range are acting fast to preserve their capital, but the ultra-wealthy in the 8-figure range are treating the market with extreme caution.
They are pausing to see how both global events and these new domestic policies actually settle before committing that level of cash.
Right. It highlights a stark difference in behavior. It's a real-time remapping of wealth. Global turbulence is crowning London as a sanctuary, but these buyers are shifting the city's luxury focus heavily toward the southwest to maximize their leverage.
So as we wrap up this deep dive, here is a final provocative thought for you to ponder. If global instability continues to drive this capital into London, how far out will this prime market ripple effect push into previously overlooked adjacent neighborhoods?
What's a fascinating thing to watch?
Because if your quiet local street suddenly becomes the world's next financial panic room, well, what happens to the community on the outside of that door?